I think the globe kind of just understands that Donald Trump doesn't know what he's doing. He's repeatedly confused the trade deficit and the budget deficit, or at least conflated it for lying ends. He doesn't seem to understand who will pay the tariffs, right? He keeps saying that it's going to be these foreign governments. No, the businesses will pay the tariffs, and then they offset it on the American consumer. And that goofy formula that Peter Navarro came up with has been mocked endlessly, as it should be. But even with this reversal of the most insane tariffs, like, we are kind of screwed regardless because of the level of uncertainty that this created in the market. U.S. Treasury bonds, this is the best of my ability to explain this, so bear with me and feel free to IM if I get some stuff wrong. But to the best of my understanding, they're supposed to be some of the safest investments available because they are backed by the United States government. If there's a lot of demand for U.S. Treasury bonds, it means that global confidence in the American economy is very high, right?
For instance, the great financial crisis, when the stock market was tanking and nobody wanted to invest in companies, people were investing in, ironically, America was benefiting because our Treasury bonds were the safe place for all that money to go, the extra money.
Because also the yield is high if the Treasury bonds are healthy, the longer they are, meaning you're betting on it's more stable if the people that are betting on this think that you're going to get more of a return if you invest in the U.S. economy long term, right? And when the United States borrows money from other countries, it does so by selling Treasury bonds. So the stability of these Treasury bonds is essential really to everything, right? Like, it's the foundation of everything in our economy. Our government debt is issued as bonds to the public. And so with these bonds, it's a little bit misleading to people when they see the prices going up, because it makes it more likely, or when you see the graph going up. Here, I'll abandon that for just a second. Let's play this clip and we'll get back to this, the bond story from Fox News. This is Fox Business's Charlie Gasparino, and he's trying to basically throw cold water on the idea that because the market somewhat rebounded, that Trump has outsmarted the world.
From Fox Business Network now. Whew, this is quite the moment. As you can imagine, the art of the deals all over the Twitter sphere right now, as people say, I mean, maybe this is the way he planned it. To John's point, Charlie, about the Treasury Secretary saying, maybe you could say that he goaded China into a bad position for themselves. Well, don't retaliate, things will work out well, he said.
I mean, I want to tell you right now that Donald Trump outsmarted the world. Trust me, I'm an American, I support my president, but that's not really what happened here from what I understand. And I know I'll get pushback, but here's what it is. First off, we should point out that one of the good things about this is that Scott Bessent is finally in the White House. He's finally leading this. I mean, up until a couple days ago, it was Lutnick, it was Peter Navarro, the Commerce Secretary, the trade advisor, very much hawks. Now it's Scott Bessent, who believes in cutting deals as opposed to, just just putting these tariffs out there and let's be a mercantilistic economy. That's number one. But number two, let's recall what happened overnight. And from what I understand, and I'm getting this from people that are talking to the White House, what happened in the bond market overnight, the spike in yields on the 30-year and the 10-year bond, which showed that people were dumping our bonds. And who were those people dumping our bonds? Japan, the biggest holder of bonds, was selling bonds. That's what I'm getting from some very big money managers.
Just for a sec. So just to stop right there, as I mentioned earlier, the foreign governments, if there's high faith that the U.S. economy is going to be stable, they're going to buy U.S. Treasury bonds. But the yield falls. Yields fall when the bond prices really start to go up. And you may have heard the term yield curve inversion. This is usually a recession indicator, right? And so that's what he's referring to here. But we can go back to this clip.
Was selling bonds. That's what I'm getting from some very big money managers. China, maybe to some extent, but it was largely Japan and others. If you have a mass sale of bonds, that means people are losing confidence in the U.S. economy, on the ability to do deals with us. And from what I understand, this is what forced the hand of this 90-day reprieve. Now, is it a good thing? Are people coming to the table? Yeah. But if you read between the lines, or not even what Scott Bessent said, we have no deals. Right? There's nobody that is really there saying this is what we're going to do. And they paused it anyway. So my thing said, well, I'll give you this. There is some art of the deal here. And by the way, brilliant move by putting China in the corner, but that's a whole separate thing. Because remember, that's a very difficult negotiation. Everybody else is a lot easier. They do want to deal with us. Whether they want to be, forced into really bad trade deals on their end is a whole other negotiating story. But make no mistake about it, you cannot divorce this decision right here from what happened last night, which was, people focus on the stock market all the time. It's the bond market and the sort of lending markets that's the plumbing of the economy. And those markets were imploding last night. And that's why we have a 90-day freeze. Let's see if those markets improve. Someone told me we had a decent treasury auction today. But if you can't sell your treasuries, guys, and people are unloading your treasuries, like Japan, which is, I believe, the largest foreign holder after China.
Just to be clear, there was an auction that just happened a few moments ago that Bessent just referenced, and it was a healthy auction, Charlie.
They are not. Well, that was yesterday. The stock market is not in as great of shape today. So, it's even worse than what they're basically describing there. But it is that he hit on it. That yes, it's the bond market that is the most important to look at the health of our economy, and it's really important that Treasury bonds are stable because they have lower returns compared to stocks, which is the casino capitalism that we talk about here. But they need to be trusted because that is the foundation of our economy and really the global economy. And now the markets are basically showing that you can make more money by buying shorter maturity U.S. Treasury bonds versus the ones that are longer maturity. And what that means is that people think you can make more money on short-term U.S. bonds versus betting on the U.S. economy continuously growing as it has throughout our history over a 30-year bond versus a 1 day or 1 year one or a multiple month bond, et cetera. So it's the bond market is dependent on the people having faith in the U.S. economy, other countries having faith that the United States will find a way to pay people back. And then that translates to the health of longer term bonds having those higher yields. But that's not the case right now. And that's what he's talking about there. So the Trump administration is going to play with the stock market. We're already seeing what happened. We're already seeing that there was this extremely bizarre spike in trading right before in call volume. Right before Donald Trump made this announcement about tariffs. And maybe we just pull up this video of Schwab here. Sorry to throw this at you guys without saying I wanted to play this, but I just got to this thought. Oh, the link's not there? Okay. All right. Well, there's a short clip, and we'll play it later in the show, of Donald Trump just bragging within the Oval Office about how much money his buddies are making. And so there's a lot of that's happening right here.
But this is fundamentally a freak out about China. Adam Tooze has this piece in his chart book. Did in fact have a certain logic. Shake the world, flush out and isolate China. He continues. At the next stage in negotiations with those who are willing, there is nothing to prevent the White House from demanding conditionality with America's other partners to further target China. Probably all these places that have relationship with China. So remember the penguins and closing the door to indirect imports from China. A radical move to decoupling was always going to be a shock. It was always going to hurt the markets. But you do it this way, where you announce it on the entire world and then just do it to China. He writes, this way 125% tariffs on China almost come as a relief.
And it's just the idea that like basically the administration is somewhat like resentful of the fact that China doesn't need us, and that they have kind of onshored a lot of their manufacturing, and they've centralized their trade policy, or not their trade policy, but their industrial policy. And so they have this kind of resiliency as opposed to all this outsourcing and globalization and contracts that the United States has engaged in. It's made us in a more precarious position that the Trump administration has just exacerbated because Trump is an idiot.
Yeah, and I think that certain tariffs to support labor and stuff away from countries that have horrible conditions is good. I think this is escalating towards this is a full-out trade war, and I worry that it could be more than that in the future, because we're just, instead of like competing and saying like we're going to use industrial policy to try to compete to be the country that produces the batteries best, or cars the best, or airplanes the best. What if we just blow up their dams instead, because they're beating us on this stuff? That's my fear about all this.
Yep. This is what I was referring to earlier. The AOC and Adam Schiff have both kind of talked about this and starting some sort of investigation that the NASDAQ call volume spiked minutes before the 90-day tariff pause was announced. Not a good look at all, says this guy. Definitely not. I mean, this is clearly some sort of kind of insider trading situation. We don't know who that buyer is.
When the dip is going to undip, it makes it easier to buy the dip and then sell.
Yep. Seth Villett, PhD, said state-issued bonds have been the primary engine of capitalism since the formation of the Bank of London. Arguably, the single greatest, most important aspect of the success of the capitalist economy is the bond market. Just want to back you up here, Emma. I work in finance despite my PhD in literature. Thank you, Seth Villett, PhD. Because math is not my strongest suit, and you feel like you have a good handle on some of this stuff. But it's also just crazy how fast the news is moving. Trump really has perfected the strategy of giving people an inability to sink their teeth into anything before he creates the next chaotic moment. But I do think that we're looking at long-term damage to the health of the United States economy, because this bond market is not recoverable. I mean, we're not going to probably see it for the next 30 days. But then when there's there's going to be a bit of a lag, but in the next 45 days, 60 days, a lot of the indicators are that we could fall into a recession. And the inverted yield curve, that doesn't always amount to a recession. That's a bit of a misnomer, but it can be one of the indicators, and also everything else seems to be an indicator.
I mean, it's pretty basic. Like, if we're expecting factories to get made, that requires a large amount of investment. If that's not coming from the state, which it's not, because Congress is just sitting there twiddling its thumbs, it should come from the private capital markets, and those are go to CNN and look up markets and see they are being driven by extreme fear right now. When that is happening, they are not going to building factories in Bloomington.
That's exactly right. I'm sorry to yes and again, but that's part of why the U.S. companies are hurt the most by this, is because they are the most reliant on outsourcing and contracting out their production. So I wish that we hadn't reorganized our economy to benefit corporations and given them tax cuts and deregulation, and these trade deals allowed them to create their businesses in this way. But that's the reality of what happened, and they don't have the capacity to onshore, or the willingness, honestly, to onshore this kind of stuff with the tariffs coming first.
Not without government help.
Not without government help.
Hey, folks, don't forget to hit the subscribe button and check out our daily show. We do it every day at 12 p.m. Eastern for about 2.5 hours. We even take phone calls. You should check that out.